AI is disrupting everything in the financial markets, and we could be on the edge of a market correction. Stay tuned to the end of this episode of Sunday/Monday Scan to find out which sectors could be impacted the most. I'm Chris with Investors Underground, and every single week we go over the most in play themes, stocks, and sectors to really tell you what's going on in the markets, what's been happening, and what could be setting up to happen in the week ahead. So it's a great way to prepare for the market before the open and to also create trade plans around that. So I'll give the disclaimer now that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm going to go over today is for educational and informational purposes only. So we really had some massive moves over the past week. It started kind of in the software space, and we all, saw those charts of IGV and some of the sales of software stocks really selling off on those AI disruption fears. But we saw that really spill into different sectors this week, especially in the financial sector, which could spell trouble for the market because financials are such a big pillar of the market in general. So we're going to go over all those sectors and themes and a couple of stocks on watch for the week ahead. So another thing before I get into some of the chart share for this week is that Investors Underground is running their volatility sale right now, and it's last call for that. So the deal expires very soon, likely within 24 hours of this Sunday scan. So it's now or never, and there's no need to wait, several months or half a year for the next great deal to come along. So if you've been having a little bit of trouble in this market environment, Investors Underground is a great place to really navigate these because we've been having a great time with the daily volatility, and we have a lot of experienced traders and great technology to help us navigate these markets. So make sure that you check out that link in the comments to really get a feel for what Investors Underground is offering and if it's right for you to join. So I'm going to pull up some chart share and we'll really get into the main watches and the market discussion for the week. So this IGV chart is really kind of the summary of what's been happening just in pockets of the market. So we keep getting these research reports and these new data that as AI gets more and more advanced, it's going to displace a lot of people, their jobs, and also these sectors as a whole. And so, as AI kind of levels up, it compounds. And so that means that what used to just be, things like ChatGPT or things that were AI models that could kind of help you, search around things and do stuff like that. As you get into these new models, they can actually build apps. They can really do things that it used to take a lot of software engineers or other people to really do. And so that can be a huge shift because now you can get into real job displacement, which could be showing up while at the same time, it could be disrupting whole sectors. So you've had things like the software sector already been disrupted, but now you could have services like wealth management, tax services, and other things are really starting to price in the effect that someone could build a very cheap app that can do a lot of these services that has historically taken thousands or tens of thousands of people and large companies to be able to do. And so we really saw an impact on something like XLF as that spills into names like Charles Schwab and some others as they kind of feel that pressure of AI disruption in their businesses. And so this market is kind of sorting out winners and losers of that AI disruption thesis. And we're going to get into some of the names that have been winning in this market, some of the names that have been losing, and then we'll kind of go over some macro things that are also happening. So this IGV, you can see, yes, big sell-off here, revaluation in the software names, but as you can see on a larger time frame, it's really just stalling at this support right now. I don't think we're going to see a full reversal in something like this. Yes, you can have some nice bounces off of those big support levels, but this isn't just a temporary one-off thing. You can see the volume here. You can see the chart breakdown. This is disruption. This happens all the time in the market. And it's like an episodic pivot to the upside, but to the downside, where something can fundamentally change the earnings and revenue and the growth story of an entire sector. And so that is why IGV, the index of the sales of the software companies, has been beaten up so much. But now you're starting to see that spill into other sectors, especially in the financials like IAI. This represents kind of like the wealth management, and broker dealer, some of those services. And so you can see there's been a lot of pressure there as people are pricing in the possibility of some apps and some automated services with AI displacing some of those traditional services that required very large institutions to have it. So there's going to be a couple things I'm going to go over, but I want to start with XLF and why it's relevant to traders. So if you were to look at something like SPY or something like a broad sector market index, it's made up of foundational fundamental sectors, and financials account for 15 or 20% of that. And so when you have financials start to get hit, and a couple of things have been holding up fairly well in this market, but last week they started to come in. So like some of the large tech names were still hanging on pretty well, like Apple and Google, but now those have started to come in along with financials. And so if you were to look under the surface of the index, it's been getting beat up for a while, but those last strong pillars that have really been holding up SPY and some of the large indices, those are starting to crumble now too. And so those are warning signals that you could have potential corrections or things, come into the broad market as opposed to just the vulnerable sectors underneath the index. So a couple names just to review, not necessarily to build trade plans off of, but take a look at a name like Light or TER or VRT. These are kind of like the AI disruption winners. So even though there's been a lot of moving parts in this market, these are sectors where there's still been money flowing into it. A lot of it is because of bottleneck constraints. And so whether you're talking with memory names or with optics or anything like that, you can see how well things like MU and SNDK have held up. It's because while the market is repricing a lot of other things in a negative way, these companies are kind of leading the pack in AI is actually benefiting them because of the current bottlenecks. So that can be disrupted as you have game changing news, like if you have China or South Korea or some of these other large markets really start to open up their memory sector even more. But until that really happens, you have these names that are really just getting huge amounts of inflows from revenue growth, earnings growth because of the memory sector constraints. So obviously that gets priced in over time. And so we're kind of in that period where they're still hanging on relatively strong. But that's a reason why so many other names are falling apart while these names are hanging on because they have that fundamental backdrop until you have some kind of game changing news that could, really change that. Another example is this FSLY. Again, on the AI disruption theme, you can have winners and losers, and this has been a winner. They had earnings, and anything that AI is net benefiting, that improves the future projections for the company as opposed to something that's getting hit on that. And then a couple of just warning signs, like I mentioned before, NVIDIA, which does have that fundamental backdrop of all the large AI names or the large Mag 7 names increasing CapEx, you still have some weakness in NVIDIA, as that tells you that even some companies that are getting some good earnings revisions up, if those are starting to come under pressure too, or at least stall out, that is a sign that money is leaving out of, leaving the market in some regards. And so that's something to be aware of. And you saw the same thing in something like Apple. So as money is maybe trickling out of some of these very large Mag 7 names, where is it flowing into? And a big area that I see is bonds. And so bonds have been, kind of neglected and forgotten for a long period of time. And a big reason for that is because the US has huge deficits. They need to raise more and more bonds. And basically, the whole inflation narrative has been that bonds are not a great investment to have when inflation is high, when you have deficits that are high, and they have a lot more issuances. But what's happening is that actually some of the deficits in the US are starting to close a little bit. You're having some productivity gains, and you also have some longer term inflation expectations starting to come down. And you even saw, like with the recent CPI report, you had pretty tame inflation. And so you have a changing market regime where inflation is no longer the main concern. It's more AI disruption, at least for this, period in the market. And so what that means is that some sectors that have been forgotten, like bonds, are actually starting to look a little bit more attractive, where someone can get, 4.7% on their money. If you look at like the 20 or the 30-year bond or something like that, 4.5, 4.7. So those are starting to look a little bit more attractive, where a lot of sectors are getting disrupted. And then you also have some other ways to express that, like this ZROZ. So in the bond world, you either have steady income things, or you can have instruments that represent those net present value changes. And so for an instrument like ZROZ, this is basically zero coupon bonds, which is just the value of the bond changes instead of that steady yield. And so basically, even if you're not familiar with the bond market, TLT and ZROZ are two things that are getting some inflows in this market, and that's something to be aware of for sure. Like I mentioned earlier, this IAI, this is a sector of kind of that wealth management and financials that is getting really hit pretty hard. And so I think that this is going to be the new version of IGV. And I think you're going to see very similar moves in IAI as you saw recently in IGV. And that's just as a new sector gets disrupted by some of these AI developments, that's going to be under pressure. And a name that I'm watching for a lot of downside is Raymond James Financial, this RJF. because again, anything that is heavily reliant on wealth management services, that becomes more vulnerable. So I think that you could have some, again, game changing catalysts coming, like what we just saw with the AI disruption, that is going to start breaking some of these names down. And so what I'm looking for is for basically rejections on any bounces, and then for hard flushes underneath support to play continuation names, either with put options if it's liquid enough, which in some of these cases, if they've been neglected for a while, they're not very liquid. So that's something to be aware of. And I usually play closer to in the money kind of puts on a situation like that. So I don't have to worry about getting in and out with any kind of size. And then another way is that obviously if people just want to short the common stock, that is another way to participate. And you can see names like SCHW, Charles Schwab. This has been kind of a leading indicator of what's to come in some of those financial sectors. And so you can have some breakdowns and continuation there as well. So we're getting into kind of the main watches for the week now. So just a few names within that IAI kind of index is basically names like RJF, SCHW, and then a few more of these kind of wealth management stocks that are all under pressure. And so I'm looking for more downside in those names into the upcoming week. While at the same time, you still have some names that are holding up very well in this market. And one of the names, especially in the financial sector, is the CME that's holding up very well. And part of the reason for that is because due to all the trading volume in commodities, and then with all this talk of basically futures options for single name stocks, that could be huge revenue and earnings growth areas for some of these niche sectors within the financials or within the financial index. And so CME is holding up really well. So that's a name on watch for continued strength. And then you also have names like WMT, Walmart, which has earnings this week, and this has been holding up really well. Again, it's not really AI is not disrupting Walmart. It's probably more driving efficiencies within a business like that. And so that's something to be aware of for the upcoming week into earnings, is that you could have continued upside there. A couple other names, Hood and Palantir. So these have been kind of the traditional popular names. They've been very, very heavy recently. And while they should be bouncing off of these key areas, they did bounce, but they also kind of rejected. So that's a sign that you don't have money flowing into these yet. You can have bounce areas where you can definitely play those bounces. But if they're staying heavy on key levels, then that is a sign of the times. And especially if you have any kind of market correction potentially looming, then those could be names that continue to sell off. But usually what I'm looking for is for names that fail to bounce hard at key levels. Those are on watch for downside. And you have the same thing in things like coin. So again, coming up to big technical levels, they just had earnings. It had a bounce, but if the market gets heavy, then those bounces tend to reject and you could break underneath that long-term support. Names like App and CVNA, these are also on watch for downside. Again, these have had short reports against them. Now you have some, judges or some other institutions looking into the financials of some of these companies now that some of these concerns have really been brought up. And so these are on watch for continued downside, especially if the market in general gets heavy. You have names like AG and some of the silver miners have earnings this upcoming week. And so those could be some big winners from those potential earnings as they show the revenue, scaling up at current metal prices. Even if there's been some pressure in the silver market, they're still minting money over at AG and some of these other places. So these are on watch for continued upside, especially if the market stabilizes and people are looking for money to rotate into things that are getting better valuations as the fundamental picture improves there. BE, it's a niche sector. This has been, a choppy one because I've been looking for a breakout for a while on this one, but as the market gets heavy, a lot of times it's just kind of consolidating in this range. So I think we'll need to see some market stability in order for this to truly break out, but it's holding these levels for now. But again, I have no problem either hedging a long position with put options if the market gets weak enough, or just stopping out and looking for a re-entry when the market stabilizes. But BE still long-term bullish on this, but if the market gets weak enough, it can drag down anything. RIVN, I'll be looking for a big rejection on this one. It had a big squeeze out on its earnings. It lost less than it was expecting. And so after a big move up like that, if you have some market weakness, you could have some rejections and a big fade there. So I'll be watching that. And then HIMS could be on watch for reversal if they get some kind of game-changing news. This got really hit hard after NVO filed a lawsuit against them, and they had to take off their weight loss products on their platform. But if you had any kind of news change there, you could have a potential bounce. And then a couple other names or themes to just really watch in the week ahead is really a couple things. One, you could have the tariff Supreme Court decision come out this week, and that would mean that the Supreme Court has decided whether tariffs can actually stay in place or whether the administration has to find other ways to kind of navigate some of those trade deals. And so that will be a big catalyst. There was something on February 20th that could potentially be, looming for that. And so that's something to watch out for. And then you also have a couple more key earnings like names like Walmart, which we talked about earlier. So those are the main things that I want to talk about on this quick, Monday night scan today. And again, just a reminder that Investors Underground is closing that volatility sale very soon. So if you haven't checked it out yet, make sure that you click the link in the comments and really look at those deals before they go away, because you don't want to have to wait, 6 months for another deal to come along. So before prices go up, make sure that you lock those in, give Investors Underground a try, and I think that you'll really enjoy it. So that's all I have from myself this week. I hope that everyone has a great week ahead, and we'll see you in Investors Underground. Take care.